Let me now bring on board Arvind Sangam, Managing Partner of Geosphere Capital Management on board. Arvind, good morning. Thank you for joining us. Are you surprised and delighted with this year's price action? 3 days, just about everything is on a tear.
Well, I guess I am surprised and I guess maybe a little delighted, but the reality is that this price action, I wouldn't get too excited about it because it's a long year ahead of us and there's going to be ups and downs. So it's nice to have a good start, but we'll see how the year progresses, and there's some positives and some negatives. We have to wait and watch how things develop over the year.
But Arvind, the way triggers are stacked up, do you think we are on course to convincingly trade above a new high in first 3 months?
That's a tough one to call. I mean, to make a call in the first 3 months, I think the momentum could carry us there very quickly. But I think there are some bumps along the way that I see in the first quarter, which makes it a little tricky to say whether we'll get it all in the first quarter, whether we get it in the second half. And I think the bumps that I see are both, India related in terms of the upcoming budget in February, how much more specific policy support we will see, how much fiscal discipline we will see. The current account deficit numbers that came out a few days ago were somewhat concerning. So what happens, to inflation, to RBI policy? Those are all near-term triggers that could take the market to a new high. On the other hand, they could also cause this rally to, any of these continue to evolve in a more negative way, could cause the rally to get somewhat truncated. And then on the global side, I think the U.S. Fiscal cliff has been temporarily averted, but now there is going to be, over the next couple of months, a whole new debate on the debt ceiling and what kind of cuts in spending the president will put on the table. And as that plays out, I think there is going to be some volatility in markets. So there are some headwinds, which is why I can't say the first quarter looks completely smooth sailing, and therefore we're going to hit a new high in the first quarter itself.
Arvind, just picking up from the point that you were just making about fiscal cliff and the concerns arising thereby, do you think a contraction then in central bank liquidity is only going to hurt the risk rally across the globe?
Well, I don't see central bankers tightening, so I'm not sure that there's going to be a contraction in central bank liquidity. But I think a risk-off caused by concerns about economic growth faltering in the U.S. because of continued uncertainty on government policy and on what kind of belt tightening further the government is going to do, and the debt ceiling debate. If all of that causes some risk-off, then that could cause markets to come off. But I think the one positive that keeps the market from coming off too much is the fact that central banks are continuing to supply liquidity, and they don't show any signs of being in a rush to withdraw that. So I think that's the one positive that keeps us sanguine that any correction will be not too severe.
Arvind, so is there a case that for this calendar year, Indian markets could get record inflows? We got $20 billion last year, but do you think this year we could overshoot that number?
It's possible we could overshoot that number, but I think the issue this year that is going to be a challenge for Indian markets compared to global markets is the issue that you have, if markets like China start to do better, then some of the global liquidity could be, last year India was one of the very few games in town for most of the year where global liquidity, trended towards. There were a couple of Southeast Asian markets that saw that too. But if you saw China and then related to it, you saw Brazil, even Korea to some extent, which is more China dependent. If those all started to see better fundamentals led by China, then you could see some of the liquidity move in different directions. I really think 2013 will be a year where for this market rally in India to sustain, you can't just count on foreign money buying and Indian selling, because Indian HNIs and institutions were generally sellers last year. I think this year is the year where for a sustainable rally, you may see maybe less foreign inflows. I don't know whether it'll be less or more, but my central assumption would be not to count on more. But I think the real challenge or the real, opportunity is going to be for domestic investors to buy into the story and to be able to sustain this rally. I think that's important.
Arvind, at a time when earnings are yet to pick up. Do you think for 2013 there is a strong scope for PE expansion in Indian equities? Because that was the story for 2012 as well. Earnings never picked up, but PE expanded. Do you think that PE could expand further?
I think at this point, in the early stages of a rally from an oversold condition, which is what 2012 was, you do get PE expansion. The second phase of the rally is almost always in most markets driven by much more moderate earnings expansion and more meaningful, much more moderate PE expansion and more meaningful earnings expansion. So last year was a PE expansion year. This year is going to have to be a more earnings, follow through to drive a sustained rally. And I think the real opportunity in 2013 lies in continued improvement in earnings driven by or not continued, but for somewhat better improvement in earnings driven by recovery in economic growth in India and maybe some RBI policy support in terms of lower interest rates if inflation remains controlled, and all of that should drive earnings expansion.
So Arvind, when it comes...
And again, that may take maybe till the middle of the year before we see meaningful earnings recovery. So, the markets, therefore, I'm somewhat reluctant to bet that the first quarter will take us to new highs because that'll be almost entirely PE driven, and the earnings expansion will require a little later in the year. Sorry, you were saying something?
Right. Arvind, so when it comes to India and one talks about sectors, which sectors and pockets are you most bullish on and bearish on at this point?
Well, to the extent that interest rate policy is going to be supportive this year, and I assume it will be, moderately supportive, I'm not expecting RBI to go completely, gangbusters on interest rate policy turning benign, but I do think that we could get 100 basis point or maybe a little bit more depending on how inflation, shakes out, how monsoons shake out. So there's a few unknowns in the latter half of the year. But if the interest rate policy remains supportive, then the financials, which did quite well last year, could continue to have further improvement. I think beyond that, some of the cyclical sectors, to the extent that China looks better, if that plays out through the year, and again, I'm not expecting China to have a runaway economic rebound, but moderate improvements in Chinese outlook should drive the metals and mining sector to have a decent year this year. Last year, it was one of the less attractive sectors, but with China showing signs of life, it could be an interesting year for metals and mining. And then I think then we come back to domestic sectors like consumer and then some of the export-oriented sectors like pharma. That's where investors have been hiding. If this market is going to have a sustained rally, I think those are not going to be the market leaders, given that those were the safe havens. So I would look for metals and mining, and then any sector that sees some meaningful either policy or macroeconomic recovery. If you see infrastructure or corporate capex recover, then you could see some of the related sectors that benefit from that benefiting. If you see policy action on the power/coal sector, that could benefit. But those are not things that we feel particularly compelled by. Oil and gas is a sector where we think things are coming together somewhat better, and we find a couple of attractive opportunities there.
So how exactly are you betting on Indian consumers from a portfolio standpoint? What do you own there?
We don't own anything in the Indian consumer space. I guess financials would be the way that we would bet on, because financials to some extent are both, depending on which financial you own, are both a consumer and a corporate play, depending on, again, the specific bank. But I think that the consumer stocks are a little rich for our taste, and I think those have been the safe havens of last year. So we're not looking at those as the place where we want to play.
But you do have exposure to Indian oil and gas and some power stocks.
Oil and gas and specific power stocks, and yes.
And in terms of your overall allocation, are you overweight on India or are you neutral on India?
I would say we are moderately overweight on India and have been for the last 2 or 3 months.
And what would be that tipping point, a tipping point at which you will start taking your chips off the table?
It would be either the market having another 5 to 10% rally quickly without the fundamental earnings follow through, which would suggest that from a PE standpoint the market's getting fully valued, or if we got concerned about some of the policy follow through not being as benign, or inflation not looking very benign. Those would be things that would that would cause us to take our risk down in India. And then on a global basis, if we saw global risk off, then that would cause us, on a global basis, India would be part of that risk off. But India specific would be more related to India, specific factors.
Mm-hmm. Arvind, when it comes to earnings, what do you think could be cases or pockets of concern when it comes to India in particular?
I think the Indian power equipment space is one area. I think that earnings growth over the next few years is going to be extremely disappointing because of the fact that I don't see, even if there's some fix on existing problems, there's going to be any meaningful new capex on new power plants over the next few years, new projects starting. I think that's very unlikely. So that's going to be an area where I think earnings and backlog and orders could disappoint. I would say, other than that, I would see some potential for some slowdown. We've already seen it in gold-related kind of consumer sector. So we'd watch for which other areas of consumer could see some tightening, some slowdown, because that's been the area where spending has stayed relatively robust. And we are seeing wage growth being less than inflation. Therefore, there is going to be some stress on some of the discretionary items. We've already seen it in the auto space last year. So that may continue to see some pressure. So especially if metals and mining prices start to move up, then some of the companies that may not have pricing power could get squeezed. So those are some of the things that we'd look at from a medium-term standpoint, where some of the risks may lie. But I don't have any clear perception on where exactly those risks will play out. But some of these things could be worth keeping an eye on.
Fair point. Did you participate in the NMDC offer for sale? Because that, in a sense, really fits in or ties very well with your investment strategy: a cyclical stock, a beaten down stock, and again a commodity stock.
Yes, NMDC is one that we did like the story. We think it is a unique story. We always worry when we own government companies about economic decision making in the best interest of shareholders. But we think this is one that is well positioned, both from a global pricing strength in the iron ore market, and in India, NMDC being the almost the only game in town, with all the other private mines having some serious issues and shut-ins in many parts of India. So therefore, we think that could be in the same league or in a similar vein as Coal India was a couple of years ago when that came public. And so yes, that's one that we like.
Bullish on NMDC. Arvind, final question. I distinctly remember for 2012, you were bullish on Tata Motors, and you called Tata Motors as a special situation stock. Are there any other special situation stocks you're betting on?
Well, I think special situation stocks, one of the ones that could be interesting is Sterlite. If the government does decide to, as part of their disinvestment, if they decide to put up for auction the Hindustan Zinc stake, and Sterlite is able to get hold of that, then I think that could be a very interesting story in terms of taking care of some of the balance sheet concerns in terms of the high level of debt and the cash they would get there, and it could show that at least some of the problems they've been having in terms of doing some consolidation and getting some of the things right could be behind them. So that could be an interesting special situation.